Hey everybody, it's your hospitality friend Glenn. Thank you for spending time with us for another episode of No Vacancy Live. Excited to have you here today. And I'm going to tell you what, I've been on the road so much. That's why I got all these bags under my eyes right here, because I've been traveling, getting all the news that you need to know out there. And one of the stories I keep hearing is about a topsy-turvy investment market. What do you do? How do you approach the hospitality industry right now from an investment perspective? So been thinking about this for a while, and if I got to get somebody to give us the actual scoop, well, I'm going to go right to get the best. And that's why I got with myself Mr. Adi Bhoopathy, managing principal and head of capital markets with one of the coolest hotel companies around, Noble Investment Group. Adi, how are you?
Doing well, Glenn. Thanks for having me on.
So great to see you. We got a lot to unpack today, but I want to start from where you are today. What is your head? Where is your head at today in a world where we don't really have clarity?
Well, the course is still on track for us as we plan for getting into 2025. We have a pretty strong acquisition plan for the year. We are looking to invest close to $500 million in equity that we are well on track right now. And we have, by the nature of our closed-ended fund structures, we do have legacy funds that have some exit of asset plan for the year. So the year started off well, and the first quarter was ahead of plans for the most part. I think it's echoed by many of our industry peers, while April and early May has a little bit of choppiness, but I think the tailwinds for the hospitality industry are still strong, and the fundamentals are still active. And I think this is where being a sharpshooter specialist in the business with over 30-year track record that we have, that that allows us to be very intentional about going through trying to find the appropriate acquisitions when many people are sitting on the sidelines, because all the allocators, it's hard for them to work through turbulence. I think they come in, they're very time centric. They come in and out when things are good. But I think it's the sector specialists that find this times to be very accretive. So.
Yeah, awesome answer. So I want to break that down a little bit, and then we'll get involved in your particular strategy, including extended stay and all of that kind of good stuff. So when AHOA time, about 6 weeks ago or stuff, I was seeing a lot of negativity and shock in the investment environment, in the wider economy. In fact, I did a speech last month talking about how consumer confidence is down more than 30% since January. And I was being really negative on the hospitality space, but I'm starting to come around to, and I think you're helping me get there, that we really have seen an incredible shift in society where experiences and travel are at top. And I think people are willing to give up other elements of their lives, like fast food or coffee in the morning, but will continue to travel, keeping our industry more resilient. Are you feeling the same thing, or are you seeing evidence in a different way?
I would agree on the constructs there. I think even prior to the last health crisis a handful of years back, I think the consumer, the percentage of the wallet being spent towards experiences and hospitality falls squarely in it, was continuing to have an escalating percentage of usage, and that trend, if you talk to any of the the Visa, MasterCard, Amex, airlines, I mean, those sides of it, the growth and the leaning towards those experiences continues to be a strong piece. I mean, personalize it to yourselves, right? It's like, hey, where do you kind of going and having that connectivity with folks and meeting and having those experiences are high on individuals' list, and finding ways to go about doing it. Maybe it's a little more cost conscious ways to go about it, but that desire to do that experiences continues to be a strong piece. And the other side of it, I think, just by demographics, the traveling, the age group that's, they call it the 55 to 70, that group continues to grow. And so the people traveling for experiences also, that the effect of the numbers, sheer numbers, continue to increase. So there's clearly a positive view towards it.
Correct. And I do see definitely, I think I'm starting to see a reshuffling of how people are spending their money. I happen to have been in Las Vegas last week, Adi, and it was packed. So I know people are still out there spending. So set against all of this, and you already laid out 2025 for us, but how are you positioning yourself really to identify and capitalize on opportunities that are out there in the market? And what are you really thinking about those strategies?
Yeah, I think, just the core to the view is, when you have a track record, that's 30 plus years that have gone through a lot of, different cycles, allows you to have a credibility in the industry. And, for people that are looking to exit, they want the appropriate certainty in this environment where, cap debt is choppy, and, certainty to close. And, a lot of times folks make a decision to exit, and it's kind of somewhat late by the time they choose to, especially when it's a need to exit versus it's just a good exit for them. They usually, it's a delayed time period by the time they do it. So having that speed, the accuracy, and the certainty to close becomes a very big part for that group. I think that part is great. I mean, I think so that's certainly going to be a backdrop to go about it. But I think for us, we kind of step back. We are very data driven in how we go about the business. I mean, you can always say, hey, this is 50% of replacement cost, so it should be a good deal. I mean, that's not a great approach, because not all markets are put together the same. So being very thoughtful and intentional about what are the markets of today and the near-term growth. I mean, we don't invest with 10-year horizons in our hold periods. We are a 5-year view in our investment platform. So we need to know markets of today and near-term that are going to be growth markets, and not just bet on recovery indefinitely when it might come in 10 years, right? So we have to be more intentional about what has the right constructs of demographics and business that has a good balance that are executionable today. So we focus with the markets, and then we go hunt in those markets in the right sub-markets and the A+ real estate. So it's think about us as market snobs, so we kind of pick the markets right, and then go about it. So.
I think, Adi, you would rather be in, hypothetically making this up out there, cities don't get offended. You would rather be in a Dallas submarket, which is expanding rapidly right now, versus maybe, I'll give a ding to my own state, somewhere in upstate where there's really a lot of opportunity has shifted to other parts of the country, right?
Yeah, I think that, and also, you want to have the right market that has a year-round business. It has many different demand generators, but also ultimately it's an investment. So you need to be in markets that you have the higher number of potential buyers of your asset when you've created the business plan on the exit. So you need to have a market that is dynamic and that's of high value for potential investors on the other side
of it. And that's a great strategy when you're doing for 5 years. You could kind of see over the horizon just enough to know what the market's probably going to be like. Now, Adi, I just caught you guys made a big deal. You just bought 16 Wood Spring Suites. For those who don't know, extended stay. a property. One of the first major brands out there was bought by Choice Hotel, and it was called Value Place, probably about 10 years ago, maybe 8 years ago, and really supercharged that brand. What made you focus on this particular portfolio acquisition? What do you really like about that deal?
I think it's less about that particular investment opportunity. It's kind of stepping back on the overall construct. We are big believers of this, branded long-term accommodations, and that's a area that that we have spent a lot of time over the last couple of years to lean in. Just kind of where the industry is going, a segment that is underserved today, and with the confluence of housing shortage and need for interim levels of length of stay, it's just the right type of whether it's traveling nurses or infrastructure growth, those types of consumers. It's just the perfect gap. And just think about like student housing 30 years back to what it is today. It's just a different evolution. It was there before, but today is different than 30 years back. So the same constructs today, extend, this long-term accommodations, were there over the years, but the branded versions today are just a meaningfully different execution. So we have a lot going on. We have, between what we have under acquisition along with the 16 that we just bought, we're going to be close to 100 hotels on the operating by the end of the year, and we have a very robust pipeline. We have 15 under construction, and we have about the same under pipeline today. So we have a very scaled approach to the branded long-term accommodations segment, and this recent acquisition is just one step towards it. We have a couple of other portfolios that are under agreement right now, and we worked with the brand partners like Marriott and Hilton to kind of create the right product type, and we are the launch partners and one of their large team that has put it into place. So the BLT avenue is a big piece of our growth. So
yeah, and one of the things I've loved about your company is now it's more frequent that the owners, operators, and investors help design the brands, but you and Mitt were in there like really, really early on, helping push designs that would improve customer experience while helping you be more profitable with creating that business model. So how are you thinking about like brand mandated renovations and all of that, particularly as costs continue to expand, because you got to keep things fresh in order to beat the new guy down the road, right?
I mean, I think that is the base understanding that everybody, it does hurt when you have to come out of pocket at wrong periods of time. So, while I have that empathy to that thought process on the investment side, I think with the notion of it being an operations intensive business, which is hospitality, having and relying on brands as a key driver for execution, keeping that brand fresh is an important piece of the value proposition. So while everything getting done on a cycle is probably not the greatest of ideas, but there are certain pieces to that renovation that are very obvious and customer facing that is appropriate to go and execute. So the need is there, and obviously coming out of many years of the downturn, and assuming they were renovated before that, So these are a lot of the acquisitions that we've done over this recent 12 months have had that construct of long in the renovation cycle and brands kind of having to make a decision. So I think that the need is there, but also that turning into an opportunity for an investment is very, very real,
Yeah.
and owners are having to make those choices today. And but I think having that relationship with the brands to appropriately size the renovation and having a collaborative approach to the brands and what is accretive and what is just to check a box. I think having that type of honest discussion is actually happening,
Right.
and all the brands have are open to that discussion, because having appropriate amount of renovation done is better than not having
Oh,
anything.
totally. Right. And it's really, you got to balance the needs. And I think some of what's happening in the wider industry is that the brand said, okay, during COVID, and now everybody's got to try to catch up with things costing a lot more money. It just becomes a little bit more complicated. But my brain is only working half power today, but I'm putting together some pieces here. If you typically do deals that you want to hold for 5 years, then part of your strategy might be finding underperforming properties, doing that brand mandated renovation, getting it in peak form, helping with that. And then before that next cycle is due, traditionally in the hotel business, then you sell before you have to do the reinvestment. Is that a strategy you find, or am I just
I think you hit the nail on the head. I think, and we want to, you have to pick a time period. You want to front load it so you capitalize on the efforts that you put in, and kind of normalize the investment performance. So, and a lot of the buyers of our assets are people that appreciate a consistent yield, because we've created the right sizing of the product, whether it's the operation of it or the physical product of it. We've stabilize the asset for the next person, so that allows them to have a consistent yield going forward. So
and hopefully they'll only have to do like a soft goods renovation and more on the lighter touch if you really
less disruptive on the next cycle.
That's a really fascinating way of looking at it. And I love asking these questions, because I wish when I was younger I'd actually gotten involved in the investing side of the business. I was more in the creative universe, and now in my 50s, I wish I had done that. So I'm trying to learn as much as I can now, and I know a lot of young people out there want to learn. So what advice are you thinking about giving to emerging younger investors looking to enter the hospitality space today?
I would say, be very clear with the objectives that you are coming into the space, in the investment side. And, is it for yield? Is it for growth? Is it for hold? I think I believe having a clear understanding of the type of execution you want from that investment is going to drive the type of product or the market or the chain scale that you go into, because if you don't have that, you will find, given the operations intensive part of the real estate, it would be a mixed match and potentially could turn into trouble. But also surrounding yourself with the right team. So whether it's the value add team, whether it's the operations or the capital renovation team. So having the right team to go about executing the plan and making sure your equity and debt are lined up with the same timelines as you are intending to do. So if it's I want to hold it for 10 years, you kind of put the right type of capital to match that same thesis, so you are aligned from the get-go, so you don't find yourselves in a unintended time period and you're forced to do something at the inopportune time, right? So I think just making sure alignment is there from the get-go is very important. So
is there one aspect of a physical property that you should be on the lookout for that's not obvious but screams no, don't invest in this property?
Physically, you just have a team that goes through it and check for everything upside down. But I think obsolete arrival and getting through the guest experience
Right.
is something that you just can't change without substantial amount of reinvestment. So having a physical box that could be upgraded to a quality and has the bones to have the appropriate longevity of a building is important. You just some of
Yeah.
these old school cylindrical buildings, or
Right.
just there's nothing you could really
Yeah.
creatively do to make it lasting. So finding a physical product that can give you the upside to renovating and doing it right is something that either you have it or you don't.
That is absolutely right. And to give a clear example of that, I've been in a number of these old school big box conference center hotels, right? And if you got your premier restaurant all the way in the back, hidden, and you can't do anything because the infrastructure is there, you're never going to probably be able to maximize opportunity with those restaurants because of the way consumer behavior has changed, and you can't get all of that out front. So great point. Anything else that we need to know, Adi? You looking forward to NYU Investment Conference coming up next week?
Absolutely. Being next to 3,000 of our closest friends, you can't go wrong. But obviously, just being in this space for the track record of time that we've had, with different cycles, and the leadership team being together for over 20 plus years investing together gives us a great backbone. And we are approaching 5 billion in AUM right now, and we're going to be doing about 100 assets this year. So certainly a busy time, and despite the turbulence, we are definitely on path. So.
Well, the cool thing about what you guys do, Adi, is you've got the decades of experience. You've been through all of these cycles, and you know where to pull the right levers no matter what the economic backdrop is. So thank you so much for talking with me today. I really appreciate you, Adi.
Thank you for having me, Glenn.
Thank you. And I thank all of you for being here. Now you got to download this one and rewatch it because there's so many tips in here. Make sure you find us wherever you download your shows. Rewatch on LinkedIn, Facebook, YouTube, all of that kind of good stuff. I'll be at the NYU Hospitality Conference on Monday before heading out to host an event for Stonebridge, great management company out there in New Orleans, where I'll be sweating it up. So see you tomorrow right back here on No Vacancy Live. And until then, remember, you got one life, so blaze on. See you later, guys.